Hello traders, Gary Wagner here just before 1 o'clock in Honolulu, 7 o'clock in New York. It is Thursday, 23rd of April, 2020, and this is the Daily Report for Gold and Silver. After yesterday's dramatic climb in gold of approximately $50 per ounce, we did see follow-through buying on the day, taking it up about $12 on the day. Now, currently it is showing a little bit of a decline from the highs achieved in the morning session as it trades in Australia. We are currently at 1749.40. The question is, was the move to 65 the other day the end of a correction or simply part of a three-part ABC type wave correction? My sense right now is that could have been the conclusion, and the recent rally we're witnessing is the beginning of a move to at least challenge the highs at 88 and I believe challenge the highs at 1800. However, I'm looking for either some sort of a pullback to have a more favorable entry price or to buy the breakout if that is inevitably the only way to enter this last leg or this next leg of the trade. Let's take a look at our price board and then we'll talk about our technical studies and what areas I'm looking at. Very interesting action in the financial markets with gold closing up about $13 on the day, $13.30, $1751.60, and that of course is after a $50 day occurred just yesterday. And so I was hoping for some sort of a pullback to enter into the market, but we'll have to see if this market wants to simply carry through to higher pricing and challenge 88 or 1800, or if we'll see some sort of a pullback first and then move to higher pricing. Nonetheless, we remain flat with no active trades. Spot gold, $17.48 gain at 1730. Platinum gained $25 at $790. Palladium gained $61 at 1954, and silver gained about 0.4% at 1537. In terms of the equities, they were flat to down today. NASDAQ in essence unchanged. Standard & Poor's 500 down nominally. And lastly, the industrial was up slightly, up 39 points at 23,515. Dollar was neutral today at 100.615. Let's take a look at our technical studies. As you can see, we have begun the afternoon session, as I call it, meaning it is now trading Friday in Australia. There's very little movement as for now, but today's candle was most certainly a green candle, meaning it closed above the open. And the other thing that is absolutely noteworthy was the high that was achieved today when it traded as high as 1753. Now, when we look at our daily chart, what point the market retraced to see if we have completed the correction. I am marking us from 1457 up until this top at 1788, and then looking at the correction that came in, it did come in just above a 38% retracement, which means that effectively the correction could have concluded coming to this low right here. However, if there is more pressure in the market, in other words, if what we're seeing is some sort of an ABC off of this large third wave, and this being the fourth wave, we might be looking at something like an A, a B, and then some sort of C, the C going to either the 50% or as deep as the 61%. However, I think the probability of that occurring is actually rather low. The last chart I want to look at does lend weight to the assumption that the current price increase is a leg of the rally that is still absolutely in play. We are looking at a 240-minute candlestick chart. We identified this inverted head and shoulders. We saw the market actually break above that key level right here. That was the first instance, and also very short-lived. We had another occurrence which happened just a couple of days after that. Saw a long period of time in which it basically traded around that area. But most recently, we have seen a clear and utter breakout. It is not at the recent highs that we got here at 88, but it has made it above a key point, which is 1743. And my sense is that as long as it trades above this price point, it will challenge 88 and eventually $1,800 per ounce. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.